Yeah, I think there's a tiny delay, but it seems to be working. That is true. Yeah, yeah.
I'm good, man. How are you?
Yeah. Hello, chat. Can you hear me now, chat?
I
See,
mean, I
Donald, you and your bloody audio manipulation tricks.
It's working.
It's
all
fine
of a
now.
sudden.
Okay, wow, I just can hear SZ and Cred. Okay, fine, fine, fine. Okay, well, I've done the intro. Thanks for joining us on Casual Friday. All my terrible jokes I thought were that bad that the chat wasn't even saying anything. That made me sad. But here we are. It was just a technical issue. Thanks for joining us. Usual stuff. Thank you to Bybit for sponsoring Technical Roundup. Make sure to like the video and subscribe. And now we will go into full chill mode because we've got a full on expert of the charts as well as smoking on stream. SZ with us. How you doing, man? Thanks for joining us again.
I'm good, man. I'm good. How are you guys?
Yeah, pretty good. Pretty good. Week went by a bit quicker than I'd have liked, but you know, it's the world we live in. How about you, Duck? How's life going?
Good. Nothing to complain about.
Fantastic. All right. Well, look, I want to give the chat and myself, to be honest, as much chart time as possible. There are no set themes or topics, as you know, for these casual Friday type of engagements, but the market certainly is providing no shortage of content to talk about. Bitcoin moving, ETH BTC, obviously. I mean, gold, silver, metals, equities. There's a ton to talk about. And we've got a great person to take us through it. So I think, I mean, we will probably get into some difficult or specific trading questions, but do you want to just run us through what you're seeing right now and maybe give us some grounding after some crazy candles?
Do you want to share my screen?
Yeah, man, sure.
So, what do you want to start off with? Should I start off with
Probably
Bitcoin?
Bitcoin. Yeah, let's do Bitcoin and ETH.
I thought this was a Euro USD moment, but okay.
Oh, then we'll come to that. The
Right.
FX
Let me
drop.
know when you guys can see my screen.
Yeah, we can see it. Should be good.
Hang on, let me spark up.
Wouldn't be a live stream without some
You know the
plants
score.
being burnt.
Right. So, Bitcoin. So I think we're at a make or break point right now. We've been there so for a while now, but wish I had my levels on. I'm just quickly drawing these certain levels. So with me, I'm looking at these quarterly levels now for my make or break. So we've got this one here, um, which we're dealing with, and I'll draw this one here. So I think we've just been in this range for a while. I mean, I'm not getting too excited just yet, but see between these two levels. Can everybody see them? Those two quarterly levels. So we've just
99.70 and 84.80
yeah, so
for
we've just
this.
been stuck within here, really. Yes, I mean you can make a case for these, but I'm mainly a swing trader for Bitcoin, so I don't really mess about with smaller time frame or day trade unless there's nothing available in FX for me. But within this, I think the only time I get really hardcore bullish is I think if we break above here, then I think we get probably a run up towards here, which is around 11K ish. Okay, so I'm just waiting now, and if I break this down further, okay, we've broken above that, but I think we're still maintaining, just still range for me. I'm not getting excited too yet. Um, let's go to the lower time frame a bit. This is what's got my key, my eye now. So So what, forget all of that. Let's go back to my chart that I've got everything marked out on. So same levels. But I'm keeping my eye on here now. So you see this here. So this was the consolidation here that pushed it up to that high. So we're
Yeah.
stuck between that level and that level. So when we broke down below it, that was key resistance.
That's around
And now
9600, right?
so around 9700-ish,
Yeah, yeah.
96, 94. So I think if we make a clean break above here and hold, I think we shoot up towards the quarterly range, keeping in mind we're still range bound between the two quarterly levels. So even for my long, it would be short term towards there, and then I'll have to see what happens. So if it gets back above here, I'm looking for and holds, then I'm looking for a run towards the 99.70s. As a day trade, obviously you got this high, and then that resistance, that. But if we get clean smash above, then probably 11k. If this is a deviation of this level, just like here, then if it gets back below this red level, which is a weekly high there, then I think we could probably push all the way back down into the range and go towards last week's low.
That's 9500 is the red level for those watching at home. So this is an interesting question, right? So there's been a lot of maybe not super productive, but nonetheless discussion about kind of market structure, right? Talking, I mean, you and I chatted about that privately and just seen that on the daily time frame usually, and people arguing what I thought were not necessarily asinine arguments, but I've just kind of gone off the path of telling people like absolutes with regard to candlesticks and wicks. Kind of think there are more important things in life. But regardless, there seems to be a discussion on the daily time frame whether market structure's been broken, market structure's bullish, bearish. Your higher time frame view seems to be that we're still like in the high time frame range. So we're still going sideways. Would you take a look on the daily time frame? Could we get your take with regard to kind of maybe shorter term market structure or trend or whatever you want to call it? Simply because it's just been a topic for discussion recently.
I think it just depends on what time frame you're trading on, really.
Yeah.
I mean, for me, I know, see, market structure on a lower time frame for day trades will be different to my market structure on a higher time frame. So for my higher time frame, I mean, I'm still seeing all this as range bound environment until we make a clean break above here. But if you're dealing within, if you zoom in, then you don't see that bigger picture and you're just focused on this. So then market structure changes, and then you got people with their own definitions of market structure.
Yes.
I mean, if you're dealing with this, that's a low, that's a high, that's a higher low. But if you're dealing with a bigger picture, well, technically that's a high for me. So let's see if this pen tool works like this.
Yeah.
So the high, low, lower high, lower low. These little consolidation, that's within this main leg for me. This is the way I do it. I'm not saying it's right or wrong. And then so far higher, still a lower high compared to this high. Now, even in that, we could get a swing failure in that. So if we get a swing failure in that, then and drop, then I'll still think the structure within this small area is still to the downside unless we break above here. So that's why we're at a key point right now. So I'm not too, for me, that sort of structure doesn't define my overall direction. I'm just playing within here now. So if it breaks above here, then that for me is a breaking structure break, resistance break. So however you want to define it, everybody wants to define it their own way.
Number go
For
up,
me,
basically, right?
number go up.
That's what it comes down to. I think I share that as well. Like for me, it's like, well, when you break market structure or make a higher high, like you've broken resistance, essentially, right? But then it's a question of like how significant is the level that you've broken, and I think that's a very subjective determination. Like for lower time frame traders, that level could be very significant and lead to a trade, whereas if you're on a much higher time frame, it could mean absolutely dick all. Right?
I'll give you an example, right? I'll give you an example. Like I said, everybody seems to think I'm some sort of perma bear. Just because I know you don't see me tweet.
It's the
about
Grim
this.
Reaper, man. It's that guy you keep
Post one
tweeting.
thing, right? Everybody thinks I'm bearish. Bloody hell. So I thought, go along with it. But I'll give you an example. Like if I'm looking for my swing trade, right? My swing trade doesn't change that easily within one run up. Okay, just like I've been swing short, but and while I'm swing short, I'm day trading within the range as well, building myself cushion. Okay, so for example, here when it was down here, I was still bearish, but I was happy to play up and down within here. Now within here, I posted a short-term day trade because it's still within the range. My short-term trades, I gotta remember, we're still range bound, so my trades have to be short-term while still maintaining a core swing short. So here, even though the structure on the higher time frame for me was still bearish, I was happy to take a long because at that point, if you're trading within a range, you gotta remember you're still range bound. So within here, when this range was about to break this Monday's high to Monday's low last week, when it comes to this point, it's about to break out. Then short term, I'm bullish. So that was my long from there. I mean, I got to there. So that was that done. But while maintaining a bearish market structure in the higher time frame. So on the smaller time frame, if I've zoomed in, oh, that's a bullish structure. So again, if somebody could say I'm bullish structure, but he's talking about lower time frame trading, swing trading, nothing's changed for me. That makes sense.
Yeah, yeah. How do you manage that in practicality? Do you have like a different account or a different exchange, or kind of when you're managing maybe a core position versus day trading it? Well, what are the actual mechanics? How do you go about that?
Me, I mean, if once my swing trades in, unless things change on the higher time frame, I just leave you alone.
Hmm.
And then on a separate account, I love like um, you know, separate account, and I just day trade it towards that as well.
Yeah, I mean that's straightforward. I don't know. When I've tried, I don't know about you, Duck, but I mean when I've tried to balance that with like some significant level of consistency of having a swing position and then day trading like towards it, or throwing too much shorter time frame stuff in, I'd usually end up messing up both. It's not a balance that worked out particularly well for me, unless I was very strict in kind of one or the other. Which means that for me, it's kind of strict. I'm either in a swing trade or I'm kind of trading a shorter term trade off of my swing levels. You clearly have the balance down. Duck, do you have any? You don't really do that much, right?
I mean, I do it whenever I'm kind of like, okay, swing is pretty easy. Like when I'm saying, okay, I want to have this swing trade, but I see something that goes against it. Like whenever I touch the swing trade on the same account, like let's say I take a swing trade on account one, and then I'm like, okay, but I wanna be like bullish here for like a $100 or $200 move. If I do that on the same account, like de-risk some or like take some off and then take it on again, I mess it up. But
Yeah.
I usually do it the same way, like have a separate account, have a separate position, and then kind of manage it that way. But I don't do it too often, just because, like, let's say I'm bearish on a swing basis. I don't really want to take too many longs.
Yeah.
It doesn't make much sense to me. But yeah, from time to time, I don't mind it.
I didn't get
I
why
mean,
you guys try so hard to have a
for,
long
for,
and a short position on. Just inspect elements, so much easier.
for me, like when I'm trading Bitcoin a bit easier for me in that sense because I don't really trade crypto. Crypto is not my main market.
Mhm.
FX is my main market. So, I mean, I'd probably take about a handful of swing trades, in a year on Bitcoin, when it trends, and then I'll just add and add and add. Like I missed most of this move. I had a bearish bias, but I missed it. This is the thing, right? I say I'm bearish, but it doesn't mean I'm taking a trade. I don't know why people seem to think just because you have a bearish bias, it means I'm taking the trade.
Yeah.
If it doesn't set up, like this past couple of weeks, especially in FX, so many plans I had, none of them triggered my plan.
Mhm.
So, you can have a bias. I mean, if it makes it easier, don't have a bias. You know what I mean? So that's why I don't even say now I've got a bias because people misinterpret that. You know what I mean? I could have a bearish bias, but unless it's giving me my trigger, you know,
Yeah, it doesn't mean anything, right? If it
doesn't
doesn't
mean anything.
translate to
Yeah.
a trade. Speaking of which, you mentioned on that run up, you had a directional bias and whatever may not have triggered. Where do you see ETH right now? Maybe the dollar ETH USD, because that's been, I mean, leading in all regards, and I think for me at least, it's in a very interesting level now. What do you see?
Okay, so see, we gotta remember, right? This is where you gotta zoom out a bit. Okay,
Yeah.
so if I'm zooming out, I've still got my macro range from that high to that low as my mid range, as my range, and that's my
Mhm.
midpoint. So we're right at that midpoint right now. We're also at the extreme end. So, for example, say this is the swing high, pushed market lower. Everybody's getting bullish here, but we gotta remember, okay, that's fine. Then it pulls down. Same thing again. As soon as we get to the extreme, you're not looking at this. You're looking at this only.
Mhm.
What does a topping? If market's on top, isn't that how market usually looks like? Looks like this. I can show you an example. Tesla I was talking about. Can go over as an example for price. We're right down there again. So this is where again comes to market structure. So we're right at the extreme point. If it's gonna turn, so if you're long, that's fine. This is the area where I start, either scaling back some position or
Mhm.
maybe hedge or something if you're unsure. So for example, here this could still drop from here. It's right at the extreme point. Okay, and just because it breaks this would not be a breaking structure just yet. So there's breaking if you're just going to go by a black and white high, low, higher, high. Well, if this takes this higher and swing fails it, well, technically that's a higher high.
Yeah.
So you say that's a breaking market structure to the upside, or is that a swing failure? So this is where I watch the market and let it tell me. So for example, like when it came here, I wasn't too sure what's going to happen. Okay. But I wait, I let price tell me once it consolidates, once it calms down, and then once it breaks down, that's when my confirmation play comes in. Once it confirms to me, then I'm in. I'll give you an example with Bitcoin right now.
Go on.
So with Bitcoin right now, it's run up. Now, as an aggressive trader, I could enter a short, and technically a stop above here would do, but sometimes I use it a bit wider just in case to cater for a swing failure. Now, at this point, what it comes down to probabilities for me. Now, just like with ETH/USD, at what point would that have been confirmed to me? Well, let it consolidate. Or as soon as it breaks down, that's a breaking structure for me. The probabilities of the shorts are higher now here compared to here. Here, okay, if I short it, that's fine. For me, probability-wise, it's not as high because I don't know yet. It's just the way I trade. Yes, it's into resistance, but I want the probability to increase. What's the increase? There's the breakdown. So with Bitcoin right now, okay, it's into resistance. Where's the probability increase for me? If it breaks down from here, then that tells me, okay, probability-wise, that's probably going to be a lower high because it's maintaining that lower high, low, lower high, lower low, lower high. And that's where I'm comfortable entering because at that point, I'm not guessing because this is where, just for me, I mean, others, catch the high. I'm better at once it confirms to me, then I step in. So for example, here, it's into resistance. Why not short it? But I don't know. That's why when it was here, I was waiting for that breakdown. I did a YouTube video, if you remember, it's on my channel. I don't know if anyone watched it. If it broke down, then I would have shorted it. However, in this case, it broke up. So that means it's a breakout of this range. So at that point, where's the stops resting? Here, and then into this target. So
here's
again,
a question, right? With regard to that sort of, someone could catch the high or the low based on just, let's say, doing business straight at the level itself, whereas you wait for a probability enhancer in the form of a market structure break. Does that mean you end up taking a lot of your trades away from the support resistance levels that you end up marking out?
Yeah. So certain times, I have got a claim validation. I'll go in.
Yeah.
Or what I do is that's why I don't use fixed risk. So for example, if I'm gonna be aggressive here, okay, and I really want to short term, and with the context in mind, I think it's gonna go down. I'll use smaller size and to enter. However, if it starts going wrong, I'll cut it quick. Whereas here, I'd say, okay, why not just wait? And then if it breaks down, then I've got more probability in my favor, and then I've got a clear validation level. Whereas at this point, does this high hold or not? I don't know. So if I am going to enter small size, however, if it breaks down, then it's confirming my idea. So if you go back to Ethereum right now, it's right at this point. So if I go back to I've got a chart for this here. So I know this is my key level. Now, so it doesn't have to exactly go to that key level and reject. It's what happens here. So if this swing fails and then breaks down, then that's the deviation done. And then I can enter probabilities higher. At that point, I don't know if it's going to rip up. It could continue ripping all the way higher. So I stand back, let it confirm to me. So if it's, for example, in this case, if it's going to go higher, what do I need to see? I ask myself. So what I need to see in this example is if it consolidates above here and breaks above and rejects, as okay, is that swing failure or not? I don't know. But then if it holds and it gets back above it, okay, if it's done a swing failure and it's going to go to, why is it not going down? The fact that it's holding says to me, as everybody seems to be using this word, acceptance above this level now. So then I know, okay, where's my next objectives? It's going to be towards that high then. So at this point, I'll step in. Because that way, my probability of the idea is sort of, confirming. And I've got high probability that, okay, now it's holding. Whereas, so same thing, yeah.
Yeah, you've given the sellers a chance to step in at the SFP, right? And if they fail to do that,
and if I miss it and it goes, well, there's always... Yeah, sorry. I was going to say, if it goes without me, then it goes without me. I'll wait for the next setup. There's always the next trade.
Yeah, you know what? Because it's Casual Friday, I'm gonna obviously shit post, but just in person. I always think whenever I look at high time frame charts, I think there's at least one trade. I don't know, is it a week, per month, per year, that someone who's just come off baby pips ends up taking and making money. Do you ever do that? Do you know what I mean? So here, for example, with ETH/USD, it's that level at the swing high at 280, 290, whatever it is. I'm like, some guy is just going to finish baby pips, look at the daily chart and say, oh yeah, double top resistance, that's it, sell it. And it's going to work for him. We're all going to be,
this is a broken clock.
Fucking baffled.
Right twice.
Yeah, exactly. Broken clock right twice a day. You seen that kind of stuff, Duck? where you ever look at a chart and think like, what is the baby pips trade on this chart? And it's just sometimes it ends up working and you feel really stupid for making things overcomplicated.
I mean, I feel like that's pretty much always the case for the high time frames, right?
Yeah.
I mean, if you look at the high time frames, for example, like the Eve thread that I posted, that Eve range on the monthly, where it's just like, if you just bought support every time and sold resistance every time, you would have made so much money, but it seems too easy.
Yeah.
I think it's the evolution of a trader. So when they learn something new, they try to apply that exact same rules, book by textbook. But with time, a lot of those I found they don't even work most of the time. You sort of evolve and find your own path, but it's a starting point, and it's like let them get excited, especially when they see it work, and then eventually everybody learns. And it's not that easy. That's not exactly how it works, but you just go along with it, entertain it at the time.
Yeah, you get rewarded a little bit, right? Like it works a couple times, like, oh my god, this is all I ever need, and then it doesn't work 10 times and your account is ruined. You're like, okay, maybe it's slightly more complicated than this. People asking about Head and Shoulders in the chat a few times. I don't know if on what time frame, guys. I'm not terribly sure. I think they're talking about Bitcoin Head and Shoulders, but hourly time frame.
Bitcoin,
Gosh, yeah, hourly Bitcoin Head and Shoulders. I mean, I know you're not a pattern trader, but any views on the shampoo pattern there?
No. So for me, like I said, if it breaks back below here, just like here, then that's a breakdown of consolidation for me. If you want to call that Head and Shoulders, then call it a Head and Shoulders if it makes you feel better. For me, that's a break of structure. It's back within the range. So that's a high. That was the cap in the market. So if it's deviated, go back below it and starts breaking down, that's just okay. That's a breakdown, and that's all I see as. I don't see it as anything other than that. That's just the way I do it. That's just the way I do it.
So I say this publicly, like in a lot of the content that I make and stuff, that for the most part, for like in my observed experience, when people talk about confirmation, it ends up being mostly crap. I don't know if you agree or not. It just ends up being a convenient tool where if they have an idea and it goes their way, they can say, oh well, it was confirmed and it worked, and then if the idea is wrong, they're like, well, it never confirmed, so I'm okay. It just ends up being this it's just like a marketing tool almost. You're one of the few guys in like a live setting or whatever that I've seen have a actual rigorous and replicable way of approaching like what confirmation actually means. So just with this example here, right, the 9481 level, and you say if that breaks down, it would confirm the deviation, etc., etc. As far as you're comfortable, could you give a bit more detail, like maybe in terms of entry, time frame, or just how you get to doing business?
All right, so let's start with this one here, and this is where my trade size comes in as well.
Yeah.
So like I said, where am I wrong? I've already explained that if it makes another run above here, that's where it starts off from, and holds, we enter. The way I find it easy to explain is when I see if it enters a new range, then that can be considered as a structure break, whatever. So say if I'm going to be aggressive here, like I explained, I'm wrong above here, so I enter small, but then that's no confirmation. If I wasn't happy with that, then what I do is, what's the first sign of a breakdown? The first sign of a breakdown would be, well, this will consolidate it here. If it breaks back within here, then for me, short term, that would be a play from there to there, which could possibly evolve into a swing. Now, the reason why I say short term is because what if it does this and then that?
Yeah.
So in times like these, I wait for double confirmation. So again, we've exited this high here, so that's creating a new range. If it gets back within here, then that's not only back below that high, it's also back within the old Monday's range. So that is my confirmation, if that makes sense. Because it's proven to me, it's broken down once, but even in that, what if it does something like this to fill this in? So at that point, it could push back up. So if I'm not sure,
you'd cut that first scenario, right? If it reclaims the range, just hits Monday's high and pops straight back up, would you be getting out, or do you still hold out?
If it reclaims, if it comes here and pops up. So what I would do then is I'll keep in mind, okay, that's a plan now for me. I'll show you an example with SPX I did this week.
Yeah.
Okay, that'd be a perfect example. So if it does that, then I know, okay, what I want to see is if I get a bullish, when it comes here, if it gets back within here, and that's my exit.
Yeah.
So that means, okay, it's following the bullish plan. At that point, if that's a deviation, then that's another long setup then forming there for me. See that there? So if it's deviated the range, come back within it, this is no good for my bearish bias.
Sure.
However, it doesn't mean I can't trade. I can trade from level to level then. And if it does break down, then happy days. So for example's sake, from when it broke down from here, say you got an entry here from there, you don't know, it's holding. But at what point does the probability increase when it gets back below there? And that's a breakdown from there. So at this point, this could just be a retest, couldn't it? So if it breaks down further, okay, that's telling me my bear. I go back to my swing idea and say, okay, I've still got that bearish bias. Where's the next stop resting? If it's gonna make a lower low, stop resting there. And as soon as that happens, then
do you find you end up chasing a lot of big candles if you're waiting for confirmation of breaks, or does a low time frame kind of mitigate that?
There's times I chase it, and there's times I'll wait. So for example's sake, in this example here, it all comes down to invalidation. So I work backwards then. So I'm entering. Sometimes you don't get the entry you want. Sometimes you could say, well, I want to break down in a breaking mark structure pattern. At that point, am I speaking too fast? I'll slow down a bit. It's just the way I normally talk. So at this point, right, Bitcoin, so you got to understand the nature of the market. Certain markets I trade, especially in FX, they're so slow. They give you time to get on board. Bitcoin, a lot of the time, it doesn't. So what do I do in this case? As soon as this breaks, you could say, at this point, I'll probably go to a lower time frame. The break of this level says to me, I've got an invalidation there.
Yeah.
Now, at that point, I'm thinking to myself, what do I do? I can hit that market because the nature of Bitcoin is if it's in the deviation right to the extreme, it drops really quick. So at least I know where I'm wrong. So I can enter. And is my target good enough? So there's an entry here I had. So if I entered there, my target would have been here. The stop loss there. So that's one way of doing it. Another way is, well, if I waited for the confirmation, I missed it. So what I do is, as soon as I've got invalidation level, I know where I'm wrong. Marcus told me, okay, I've got invalidation level. This break of this level did it. I enter like that. So, but then this comes to, okay, how do I approach it with my position size? Well, one way is, okay, if you really want to get on board, don't want to miss it, well, you've got invalidation, you can do small size. If the market then gives you the price actually you want to see to enter, then you can add the rest of it on, can't you?
Yeah, something we were discussing as well, right, on Twitter.
But even if you enter small size, at least you got something better than nothing, rather than wait for the perfect setup. Market's not always going to give you a perfect setup.
Sure. Does risk reward play into it, or is it?
Yeah, I mean,
how do you view risk reward with this kind of stuff? Is it just the simple fact that I've got invalidation, I've got my entry trigger, and I'm good to go, or do you kind of consider that side of things? If it's at least 1 hour, or what's your framework roughly?
So the way I do it, I prefer to live in the grey. It's not black and white. It's either this or that.
Sure.
I like the middle path. So in this case, like I said, I've entered my one position, and say just for example here, right? I know I'm targeting there. Okay, if I've got at least 1-to-1 risk reward, that's a starting point for me. Now along the way, there's usually is another opportunity. As long as you've still got your target in mind, probability still in your favor. As the trade unfolds, you may get a new invalidation level. So at this point, when it broke down below here, I still hadn't hit my target. My invalidation level goes from there to there, and then I'll just, as soon as I get a new invalidation and I'm able to reduce my initial risk, I'll add it anywhere. One way is adding it because you're just averaging in, and you're still maintaining that 1 hour risk, if you want to call it 1 hour. So that way you're not worried about the perfect entry. It's a lot less stressful as well. That's the way I do it, especially for my swing trades and FX as well.
Does that mean you end up managing a lot? Do you find that, like, generally with trades, either be it managing or cutting or trimming or adding size, etc., you end up having to be at your screen a lot when you're trading Bitcoin, or is it different for FX?
Well, I'm on my screen all day anyway. It's mainly for day trades where I'm cutting it quick because but swing trades, you gotta give it breathing space. I don't overly manage it unless I have to, but so usually, like in FX, once I got a core swing position running, I'll day trade it up and down as well. So when I'm day trading it the way it helps me hold my swing position is if I'm day trading, it builds a cushion for my swing. So it's not like I'm giving back everything. But if it's but if it's certain things are obvious, then I'll say, okay, I'm out. But
yeah, it makes sense. But look, you mentioned also, or we talked about earlier, how there's a pretty weird relationship in the market. At a certain point, everything was bid up, right? Metals were flying, equities were soaring as well, and kind of crypto was the only one that was lagging behind a little bit. That seems to be correcting somewhat now, but ES itself, the S&P is into resistance if you believe in kind of technical levels at this level, or at these prices rather. Could you run us through, as someone who trades this market, could you run us through the S&P? And I don't think it's ever been as important for crypto traders as it has been in the last kind of, 3-6 months, Doug? What do you think has been the S&P timeline?
Yeah, roughly that, I think.
Yeah, but I don't think many people have kind of gone to trading it beyond going on Prime XBT or something silly. So where have you? I mean, it's obviously been a crazy, just the whole global market since March have just been a sight to behold. What have you got for S&P, given everyone's following it anyway?
Well, I think we're at a critical point right now. Again, I don't the way sometimes like I think people feel they're forced to, have a position on or have a view they have to. If you don't know, you don't know. So you just do short-term trading. So right now, I mean, I was looking for shorts. It didn't confirm, so I had to switch my bias. So let me mark on this other level here. So I love the time. I like to deal with the macro levels. Like when I say macro levels, yearly and quarterly levels, right? So I trade within those ranges. So SPX is at a point where let me just go to this chart, man. It's easier. Yeah, let's just get this chart. I'll give you an example I did this week. So we're at a level right now. So I think it's a critical turning point. So my key level is this 2019 high here.
Are you on a different monitor by any chance, mate?
Oh shit! Actually, it doesn't matter. It's just because I've tried to bring my other platform up, but it's fucking up. But it doesn't matter. Let's stick with this.
Sure.
What was I gonna say? Yeah. So we're at a critical point now. So we're at this yearly level here. So often you find market doesn't. You say one candle close. It doesn't. It's not always like that.
Yeah.
So at this point, right? Okay, it's made a daily close above. Does that mean okay? That's it. I'm mega bullish. No, because often you find fake outs a lot. So what I'm watching here now, okay, it's broken it once. When we spoke about that deviation once, gets back below it. So if I'm gonna be mega bullish at this point, so if I was long, that was my objective. So if it gets back above here, I want to see it hold above here. If it holds above here, well, I know it's already made one attempt above it. It makes another attempt. That lowers the probability of my shorts now on a swing basis. So I'll wait a while for the market to tell me. Once this holds this level, that means, okay, we're back within, above the 2019 high. And when you're dealing with the higher time frame levels, then, they give decent reactions. So for example, here, it closed above, immediately back below it. But when it got back above it here, then it's a bullishness. Now, obviously, it gave enough for opportunity here. Same thing here. One close below doesn't make it bearish. But as soon as it got back above it and held, that pushed to there. So with this situation, if it goes back above it and holds, and that says to market wants to go higher, where's the next levels to reach for? It's going to be this level here. If it goes above here and holds, well, we're above that key level here. That's forming consolidation here. So this is sort of a structure break as well, if you want to think of it. If it gets back above here, 2019 high is a key resistance, turns support at this point. That's key resistance. If it clears that, well, it's accepted above that. Support then becomes resistance. And that, for me, is the next play. Higher probability from there to there. So if I'm not confident going along there, I'll say, okay, give me that extra confirmation, just like I showed with Ethereum and Bitcoin, that double confirmation there. Because that's two macro levels resistance broken. At the same time, you'll find high. Then comes the higher highs and higher lows. So then it just so happens to be a high. See that pattern I've drawn?
Yeah.
That point there is and then I've got a clear objective. So now to the downside, well, if I'm thinking about it, okay, what for me was going to give you a break. So if I take you back, I'll say, okay, for me, this drop was still, when this happened, I'll say, okay, unless you've got some next level fundamental view and picking the top and you get lucky once every 20 attempts, then okay, you got lucky. Well, at what point did market say to me, okay, you know what, things are the top's confirmed for me? It was actually down here. Now, do I care about missing this? No. It's not as if, that one trade can define you. If you're doing it as a career, it's many trades. So once this broke, then it was there's many opportunities to get on board. So at this point, what would be the confirm to me that the top is in? But I gotta be careful now. So a deviation below here is not enough. So what's the next support level? So you gotta sometimes look beyond the obvious immediate SR. So we got this here now. So okay, it's below that. So what's the next key SR level here? Now again, if I'm gonna get bearish, what would confirm to me? So if it does this, that's still support. It's still maintaining a high low. But if it breaks below that, I'm gonna mean that's a deviation. We're done. That's another deviation of this key level. That's a double breakdown for me. Does that make sense? At that point, we've made a significant breakdown below that key 2019 high. And still, where's my scope? It doesn't mean I'm going to go all the way back down. I got to deal, okay, what's the next level? Back towards this yearly level there. So support, resistance, support, just towards here then.
Yeah, I mean, makes sense to me. But you know what? One interesting thing, and again, more on the casual tone side of things. We obviously get asked, and that, you know, when I was starting off, that seemed like the only thing that mattered. Like, how do you draw your levels, or where do you get your levels from? And apparently, the idea was if you got the right lines on the chart, you can all, you know, make a ton of money for the market, which obviously isn't how it works. But in your case, a lot of your high time frame, like a lot of even your levels that you're shorter term trading, seem to come from like really high time frames. Do you ever kind of refine them or overlay levels, or maybe draw a box or something if there's more than one? How can you give like a quick rundown on your just approach to where you get your pivots, levels, lines, ranges, whatever from? Because for a lot of people, the kind of that's where all the confidence starts to come from once they've actually got a chart they can work with.
It depends. Sometimes drawing a box makes me see things clearer. It just depends on what allows me to see things clearer. So in so so when you say drawing my levels, what do you mean? Like, just go.
Like you've got an empty chart and you just want to mark it up to get an understanding of just where the
Okay.
market is and that kind of thing, just straight up
So
mapping, if you
okay.
will.
So what makes it easy for me is to identify. So if I just do this, this looks very very bullish to me. So if I was to just draw those my quarterly levels on like I showed at the beginning, that tells me, okay, now I've got more definition to the market. I know the range I'm dealing with. So I look at where is price within. So it's all about identifying a range for me. Where are we within a range? Now, obviously, on a lower time, that looks like a big bullish, trend. But really, if you zoom out a bit and look at the levels, I mean, what we really are within here. So, for example's sake, when we had this, so these are the two quarterly levels. Once it deviated back within it, well, I know that we're dealing just within these two levels now. Really, anything below that, okay, that's a breakout. But when it gets back within, it shows me that market is really within these two levels, just like here. So once I know, okay, I'm within here, then that's it. I know, okay, within that, I'll do the same thing. I'll break it down further.
Yeah.
Then comes stuff like the Monday's range. Sometimes I'll use the Monday's range if it's clear to me. Sometimes I won't. Whatever's clear to me. So in this situation right now, this could turn right now. So I say, okay, I don't know what I'm going to do. So I shift towards more shorter term trading, and hence these levels here come in. But I explained, see this here. So right now, I don't know what could happen, but I know that zoomed in those quarter levels, if it's going to break out to the upside, well, what range is capping the market? In this case, this makes it easier for me to see. Okay.
Yeah.
So I know I can ignore this area here. That's like I'm not sure. That's fine. There's nothing not wrong with that. But as soon as it gets above that, then that's following my plan. And then for me, it's easier to see a trade setup. So if it goes back above here and holds, I know where my objective is then. Yeah, that first of all, it tells me that it's back within this old range. This is a key support level. With the context in mind, probability wise, if it's going to hang it around here too long, most likely it's going to run that high there. So once it gets back above that and holds, that's telling me market wants to go up. So I know exactly where I need to look for my trade. It's going to be down here. And then if I get it from down here, where's the objectives? Here, this high here, and then the quarterly level. And once that's done, if it goes rallies $1,000, $2,000, well, so be it. But I got to keep it realistic. I don't know if it's going to happen, but what I do know is the probability is high. If it gets back above here and holds, I can target there, there, there. If it breaks out the quarterly levels cleanly, then I'll say, okay, then I'll start going to swing mode, and I'll have more confidence to hold a longer term position, and then I can start planning for the breakout play.
Do you think you'd be able to run your strategy with anywhere near the same level of efficiency if you kind of limited yourself to? Because a lot of, I mean, from what I understand, a lot of your entry triggers and maybe even management signals or confirmations come from lower time frames, right? So if someone's just watching this and getting an understanding of your style, they think it's cool and want to do something similar or work around that same parameter. What kind of low time frames do you think people should be getting comfortable with if they're interested in this sort of thing? Do you kind of see what I'm saying?
Everything I've said now, apply that to the lower time frame.
Mm-hmm.
Everything
Yeah.
I've said now, I'm just doing that. But the thing is, right? I prefer swing trading. Like I love my entries. I get shitty entries sometimes, but the thing is, right? See, when I had a smaller account, I used to focus more on more refinement. I think I've just become lazier as time. But as long as the risk reward is good, but the same thing, even lower time frame trading, I think it's always important to know your higher time frame levels. So if I was to look at this as a pattern on its own, it's not enough. But knowing the higher time frame levels, they're usually the bigger magnets for price. I think they have. I mean, this it's no easy way to explain it. It's just
Sure. Yeah.
even lower time frame trade, I think should always my lower time frame trades are always nearly always hinged around the higher time frame levels, unless I'm in the middle of a leg. So, for example's sake, here, I mean, I may have missed this, but this is a higher time frame level for me, which means a magnet for price. So I know that okay, using my lower time frame range, this Monday's high to Monday's low, if it breaks above that, that higher time frame level is going to be a magnet for price.
Yeah.
And then comes the extreme point, which is okay, extended target. Because for all I know, this could have been a swing failure here and dropped. So I got to be realistic. I'm not aim for massive targets. I say okay, that's the higher probability target for me. Anything else is bonus. If it happens that it pushes all the way up, that's fine. In this case, it just went straight up to my target.
Yeah.
So I knew that was the high time frame weekly level. So that's gonna be a magnet for price if it holds above here. So that's lower time frame trading with the higher time frame levels in mind.
Yeah, I share that view as well. But like one of the perhaps for me most interesting questions, or just topics to discuss is turning scalps into swing trades, or swing trades into scalps is a bit more boring, right? It's like you had a high time frame idea and you get out of the way, fine. But for me, scalps into swing trades is like a really interesting topic, because if you have, let's say, like a 3-hour trade, whatever, on a short term, and that turns into a swing, or you jump up a couple of time frames, you could really change a full kind of how an account looks, for example, by kind of feeling into a position, and then it turns into kind of a level to level play into some crazy swing trade. Now a lot of people's systems don't cater particularly well for that. Mine doesn't, for example, right? I mostly get the hell out at FTA, and I kind of just sit there. Do you have any either experience or strong views or something you can tell us about this?
Yeah, so usually those kind of trades, in my experience, everybody's different. Okay, some people are really, really good, and they'll be able to really snipe the low. I'm not all that. I'll be honest with you. But what I
Oh
do
well,
know
get
is,
out, mate. Sorry, we're under the wrong impression we've got on here.
but so if I'm gonna go in with the idea, this is a prime example. I don't even know how to get rid of these fucking lines. Oh, sorry, apologize.
That's all
These
right,
lines.
man.
Is here. So I know I'm at the extreme end of a range. So in this situation, it could be a higher time frame swing trade where the swing, this could be a swing high. Okay. So if it is a swing high, like I said, remember when I said it started off from a small trade?
Yeah.
So that could be a scalp within here. And if it breaks that, that could be a scalp within here. Now, I may start my scalp because it's at extreme higher time frame level. There's a potential for a bigger move. So if there's a potential for a bigger move, a short-term day trade could evolve if it nukes from a scalp to a swing. That's how I personally do it. So I know that if I took a short there, the next level is going to be here. Instead of getting out, I'll watch it. And if it nukes, that's a scalp evolved into a swing, hasn't it? Or, as the trade evolves. So here, say you took a long from here and you were just going from there. But in this instance, if it nukes that level, then that's turned from more of a scalp to a day trade.
Yeah.
And then some may even call this a swing. And then you think, hang on a minute, this could have more legs to it when it's doing this. So as soon as this sort of price action happened, say if I was long, as soon as that happens, then that's then compounding comes in, doesn't it?
Yeah.
Because if that goes up, then okay, trade my stop loss to there because that's your invalidation. And whatever you reduced by, you can either leave it as it is, or because you've got a new invalidation level, well, you've reduced your risk. You can add another one. So that's a scalp turn into a day trade to a possible. I mean, if it is going to nuke higher, then a swing. So in this case, if I was still in this position, then I know that if it breaks this low here, most likely it's going to come to here. But because at a higher time frame turning point, yeah.
So is it the high time frame kind of market extremes where you think you probably have got the best odds of turning a scalp into a swing, right?
Yeah, but because you think about it, it's the higher time frame levels that's gonna give you a big bounce. So
Yeah.
a high time frame level usually will give you some sort of reaction. Okay, think of it like that. If you think of it, I'm gonna get some sort of reaction out of that. Now you don't know how big the reaction is gonna be, but if you do get a big reaction, if you are anticipating, usually high time do give you big levels. So the possibilities out there that a small day trade could evolve into something bigger because of the fact that we're at a high time frame levels and market turns from those high time frame levels. A high time level means more pips. You know what I mean? So
Yeah.
for example,
But then the risk, of course, is that, like, let's say you're just watching it and you think, okay, this scalp might turn into a swing. It hits the first level or the trouble area and then fucking reverses. Do you sometimes end up feeling like a mug for like not closing where you thought you should have because you thought you were going to compound into something?
I don't, because just know you can always get back in. So okay, if you got out, that's fine. But that's not the only trade. You can always get back in. I mean, a lot of my short-term trade it's just a handful. But you got to remember, people that feel that way, well, you won't get probably somebody that's been trading a while consistently for years feeling like that, because they know it's a career. It's not just one trade makes my career.
Yeah.
It's, okay, that's fine. I missed it. I miss more than I take. I miss shitloads, especially in recent environments in FX. A lot of setup plans I had because I wasn't feeling in sync with the market or uncertainty. I just stay away. I'm okay with that. But when my market does come, where I'm in tune with the market, then I go aggressive. So it averages out. And then, say I took a, I don't know, short here and I got out here and nukes 1,000. But does that mean it's the end? No, there's always going to be the next setup. So if you always think about, okay, I can always get back in. So for example's sake, if I took a short, if I'm swing bearish, right, and I'm targeting here, well, this is how I plan it. See, when you see my plans, have you noticed I have arrows, right?
Yes.
So if I take a short from there to there, okay, that's my trade done. If I short from there to there, that's my trade done. Well, I was gonna say, how do I get back in? So imagine you're not in the trade then. So if I think of it like that, I'm planning, okay, what's the next setup? The next setup is, okay, if you miss that, the next trade is going to be there. So at least you banked it, because there's no guarantee it's going to go all the way down. I think this could go up, so I leave it alone. So, and then if I miss from there to there, I know, okay, my next trade setup is going to be down here. So the point of this is, that's a breakout play then, and that's the higher probability play actually. So the more levels it breaks down off of a key swing level and going back within to the range, okay, then the probability of that means this says to me, we're ready for the breakout then. So I don't worry about missing, even if I didn't get on board here or there. There's always the next opportunity. A good example of that is the SPX.
Yeah.
So I thought SPX was going to go down, and it messed around. Like, and I did a snippet video. It's in the feed, and one of the trades was. So I'm going to show this as an example. Was here. This is a key level, that 2090. You see that on the lower time frame, unless you've got the high. This is, yeah. So if you watch that snippet video I did on my feed, I had a scalp idea, and my scalp level was from there to there, and I said, okay, maybe it's gonna go to here, but I didn't know if it's gonna come here. So as soon as it came into this level, I exited it, because at this point I don't know if it's gonna nuke. But at least I know, okay, if it does nuke, then, and I have exited it, then I know how to get back in, which would be break below here. That means that's a deviation back into the old range. I look for a setup there, just knowing that you've got a plan to get back in. That is that reduces the stress. It's all about your mental game.
Yeah.
So when you're trading, oh, I'm gonna miss out. That normally blocks rationality out your mind. Do you know what I mean?
So it's interesting because normally people would have like a level, and then they'd have two plans at that level. Oh, if it breaks up, it'll go up, and if it breaks down, it'll go down. You're saying that if anything, you should have multiple plans towards direction generally. Like if I'm bearish, I can take a shot here. If I'm too late for that, I can get back in there, etc. Is that a fair summary?
Yeah, that's one way. Another way is, okay, that the plan I posted, right? I said this could be a passive buying area, because if you got back above the range, then that's the buying. It followed that plan, then it got back within it. So another way is, if you don't want to get out exactly, think of it like this, that's a key SR level, a turning point. What do you look for? So what I say to myself, if I'm bullish, right, what do I need to see at this level? Say if it forms a bullish mark structure pattern or your bullish confirmation. But if that's a bullish confirmation for me, technically that's a long, which means get out my short.
Right. Yeah.
My plan for a long trigger is my plan to get out. Then that gives me a trigger to get out, and then I stand back and say, okay, I'll wait. What's the market gonna do? At this point, I was waiting to see if it broke that, I'll get back in the trade. Instead, it got back within it. That's a bullish setup, back within the range. What does that do? Goes all the way to the range highs, and there. So it is actually a snippet video, more recent one on SPX, explaining this exact thing. So sometimes when in the swing, it's obvious target to be met. But once the target's been met and it's at a point where it could go anywhere, I go more in towards level-to-level trading, just like Bitcoin right now. With Bitcoin, I don't know, it could turn either way. So from here, I played from there to there. Now I don't know what's going to happen. If it breaks above here, I know I'm going to play it from here to there. So you can either sit out and wait for a clean breakout of a higher time from levels, or just play level to level until things become more clearer.
Do you find your system flips you a lot? Because I know from my kind of stuff, if I'm on the wrong side of a move, if I get stopped out or invalidated, whatever, a lot of the time there won't be, at least at that same level, an immediate or a short-term way to get back in. A lot of the time, if I get invalidated, it's kind of like, okay, well, I was wrong. It's probably going to go to the whatever bullish target or bearish target, and then I can reassess. Do you find that, or is it for you kind of, okay, well, that idea is wrong, but I can probably still get on board in one way or another next to the actual level where I was wrong in the first place? Do you see what I mean? Like close to your invalidation. Because like invalidation flips don't happen that often for me. It's mostly like, okay, well, shit, probably going to go to target now. With your kind of flexibility you're talking about, do you find practically it translates a lot?
This is a good example right now. So say I was short here, and I'm saying that's my invalidation level. What if market gives me a swing failure of that level? So a good example was, it happened to me not long ago here. I was short. Market rips all the way back up and down. Now, do you say my idea is invalidated because of a stop run? No, sometimes it's going to happen.
Yeah.
Sometimes you can correct on the idea, which is okay. You still get stopped out and they'll still go to your target. That's just part of trading. It's going to happen. Just because it took you out does not mean the idea is wrong. But my idea was still correct. I said, okay, that's fine. It stopped me out. As soon as it got back within the range, market just took me out. It's just the nature of the market. You can do everything correctly. But the market, if it wants to run both sides, it's going to run you. So you just wait. So the idea is, what point is my idea invalidated here? My short idea. Again, a clean break above this level. Was that a clean break? No. If it breaks above this level, holds, and then it gives you structure, on a daily or a higher time frame basis, then your idea is invalidated at that point, not a stop run. You can say invalidated, I got stopped out, but the plan is not invalidated in the sense, okay, I gotta go back, do the plan again.
Yeah.
Because at this point, it's still valid.
So your stop being hit doesn't necessarily mean the idea is
not necessarily
done,
no.
right?
So for example, here, I'm short, for example, whatever here. In this case, it cleans breaks above, so my short plan is invalidated. Here, here's a good example. So when we first dropped, I was very bearish. So I played this move. I love this move. Quite happy about that. But
yeah, but no one remembers that now, right? You're as good as your last trade, SC. What are you saying, man?
And see, in this point, I marked out, okay, at what point am I wrong? Am I bearish bias? So I had a bearish bias here. Okay, I said, where am I wrong? If it reclaimed this level, holds, then my bearish bias has to change because my plan is now invalidated. So because this is the consolidation, I pushed it up, it should find support, I should find resistance there. But we started holding that level, and so at this point I'm saying, okay, maybe this is a deviation. So I wait. I have to wait for that plan. And I was bearish this, but it was giving me no triggers. I had hardly any trades here for a short, even though I was bearish. And if I miss out, so the fuck what if I'm sorry. It's so what if I miss out? It's gonna be the next trade. So at this point, now my bearish plan is validated. As soon, especially when this happened, that's it. So now, because that's market telling me this is then a deviation. It's holding. Okay. Now my short idea is invalidated compared to a stop run. See the difference I'm trying to explain?
Sure.
This is how I do it anyway, and what it makes me. So now I know, okay, any bearish idea has to be invalidated. If you're back within the range, whereas you're going towards the top end of the range. So similar with here, if it breaks this level, any run up towards here, that will still, in my opinion, be a shorting opportunity. Why? We're still within this. However, just like I've shown here, if it breaks above holes, then that's when okay, make a bullish. So if it breaks above here and holds at that point, well, think about it logically. Market is still within these two levels. Yeah. It's still within that range. But if it breaks above here and holds, then that says to me, okay, I got a situation. That's a break of a higher time frame level. At that point, I start going forward.
And do you give weight to the length or the duration of the consolidation? The fact that it's been sideways for so long, you expect like a equally large or significant trending move, or do you not give two hoots about that and look at just?
No, usually after a consolidation leads to expansion. So after a big consolidation, there's going to be a big expansion. Now, Bitcoin, then it comes down to the nature of the market. Bitcoin's got a volatile nature. So, yeah, I mean, we'll see. So in this case, right now, I mean, it's really messy. I wish I had a pen tool here, but in this case, right, two things that happen. If it's a big spike up and back down, right, then that says to me, like this. So if it's a big spike up, I'm immediately back down. That's usually a reversal sign for me. from a key level. So if it's consolidated for ages and it spikes up like this, if it's a slow grind up after a big consolidation, that's usually a bullish sign in this case. So big consolidation, but now it's not doing it really quick. That's efficient buying the way I see it. So that's very bullish. So again, I would only be bullish if this here, if this breakout was happening above this level here, then I'd be. But bigger picture, let's not forget we're still within these two levels.
Yeah.
Nothing's changed. Still.
For those
So
at home,
nothing-
that's 99.70 and 84.87 on the MEX feed. If anyone's interested, there's quarterly levels that we're still currently being capped by. Also, just because he's been getting trolled by the chat, can we get a live pulse check on Donald?
Yeah, I'm all right. It's just interesting. I like to listen when I have nothing to say.
Great. Okay, man. I'm not going to hold that against you. Thought the guys dozed off. Just way too casual Friday. Just...
I think half the feed can't catch up with my speed of my talking.
Thank God these are replayable, right? You can just hit the 0.5 times. And also hit the like button. We had, so many people of you watching. Thank you so much for your audience. But, come on. Do your little clicky clicks. They help us a lot. Anyway, go on, mate.
Yeah, what was I saying? Oh, that's my train of thought. So yeah, just I was saying, if I seen this grinding through this level, that's efficient buying. So a lot of people say a candle close above, that's bullish. No, but you got a candle close above here. What happened next? Nuke lower. So it's it's just more than a candle close. It's the context. So if I had this and it was grinding through this stuff, that's very bullish for me. So even here, I wasn't too bullish here until it showed me it wants to go. What do I need to see for the market to show me? Consolidates, holds, and then carries on through.
Do you ever get messed up in time frames where you're waiting for like a daily break in market structure or like to confirm, etc., but then a lot of your trading is like triggered and managed on lower time frames? Does that ever just fuck with you?
No.
Did it initially? Because that's one of the harder things.
I mean, if you've been doing this for years and that shit's still getting to you, then you're not really trading. You're not really a trader. You're just tweeting out for cloud. I love the guys I see on Twitter, right? They claim to trade for years, but certainly you can tell by the way they speak. First, when somebody gets too excited, if you've been doing it for years, right, you should be numb to it. Do you know what I mean?
Yeah.
Keep on going about something. Hang on a minute. If you're making amateur mistakes after 5-6 years, you're not really trading. You can tell just by the language.
Or it's like, how often do you win if you get a leverage trade, right? And it's like a highlight reel on your Twitter feed for the next like 2 weeks, right? That's another big one.
Voice cut off on me there.
No, so it's like when if someone celebrates just a standard winning trade for like weeks and weeks on end, and kind of has to remind everyone that I was bullish here. It's like, how often does this actually happen to you for it to define your life like that?
Exactly. I mean, we should be numb to losses and wins. I mean, even I lose. I still get stopped at loads, but with my strategy, the swing strategy is I can be wrong more than I'm right. And if you're trading a small account, you're not making much, so it doesn't hit you as hard. But say you're trading a least size account, that one win is significant. Do you see what I mean?
Yeah.
So when I was first starting off, I used to I can't go for 1 hour trade. That's too small. That's because my account was small. You do a 1 hour and your 1 hour is risking 20 grand. That's a significant amount.
Yeah.
So that 1 hour is worth more. So when I'm swing trading, people say you use wide stop. Well, my 1 hour is probably what you make in 10 bull runs in all season. That's it. It's just you see the difference.
Yeah.
So that's why yeah.
Yeah, I've had a similar I had a similar development where similar type of thing. When you're just starting out, you just want to get like 20R and get a few of those and triple your account, so it's actually worth something.
I think social media in this instance is
a
very dangerous thing, because what that does is you do that, you get hyped up by likes. You're such a great trader. Hang on a minute, you're calling somebody a great trader because they posted a line during range high, range low. Come on, be honest. How can you say he's a great trader? Have you seen his fucking account statement?
No.
To say he's a great trader. Yes, because he's posted a nice side trade, a nice flowery chart. It looks professional. It looks professional to amateurs. Do you know what I mean? I could have a messy chart. My charts are so messy. This is the stuff I deal with. But it's not about that. It's about,
how useful is it, right?
Yeah, I know it can be messy. I know exactly what I need to see. When it comes to a level, I know exactly what I need to see.
If you can't use your own chart to make money, what's the point, right?
No, but nowadays it's very dangerous, especially in crypto Twitter, where it's gives the wrong impression to a lot of people.
It's bad during big moves as well, because if you just go on Twitter during a big move, the only people, it's like a selection bias, right? For the most part, the only people tweeting are those who like have some claim to have caught it, or just like collect clout, or to celebrate, or be like, you know, all crazy about it, which is fine. I prefer that to when the market tanks. But what you don't see is the people who are on the wrong side of it, or those who missed it, or those who closed seconds before it broke out. Like all of those populations are silent and non-existent. So it's almost as if
it's also it makes you feel better. So when you're when you ain't
true.
doing anything or making much, the only way you feel better by yourself is tweeting the winners, getting that clout from
Dopamine
people,
injection.
and that's filling that void you've got. Whereas if you're making it, you don't give a damn. Like listen, I'll join in with when I'm bored. But if you're doing it, you don't give a shit about that, man. What's that gonna do for you? But for those that need to seek it, it's because it needs to fill that void they've got.
Bagsy says it's all we have left.
I'm gonna be seeing your mom, Bugsy. Yeah.
You know what? Before the show started, we also had a very quick, brief chat about like crypto Twitter trends to some extent, right? And the kind of cycles and rotations we go through. Sometimes I feel like an idiot because like years later I'm still trying to figure out like how to do support resistance really, really well, as opposed to just really well, and kind of refining things and building, etc. And in that same time frame, I see my peers who, you know, from whatever 2017 go through like 12 different trading systems and all sorts. Recently, I think we moved. I mean, it was kind of the order flow, market auction theory, market profile, all of that type of stuff for a bit. But now we seem to have a decent kind of interest in, you know, everyone's got an algo or a script, and unlike Gainsey, a lot of the time they don't have a, you know, read-only API key or some sort of proof. It's almost become a brand thing that you're like an algo trader or something like that. You must have seen a lot of trends in kind of your trading circles come and go over how long has it been now? 8 years or whatever crazy time period. Any just thoughts on people who might think that the reason they're not making it is because maybe they don't have the right tools, or, you know, chasing the next best thing?
I think for me, for me anyway, I speak from my experience. Everybody's different, everybody learns their own way. For me, I learned through mistakes. If somebody was to give me say advice to me, yeah, it goes in one ear, comes out the other. I think a lot of people, they'll only learn when they feel the pain of the failures, because you internalize it. When you internalize it, only you'll know. You can lie all you want online, but when you internalize it, okay, I need to fix up. So for me, it was you gotta be realistic with this. You do things properly. I think this is why it's dangerous. Like for example, this week, some people are feeling I'm missing out. So what if you miss out? You're missing out short term. Okay, there's always going to be the next opportunity. There's always the next trade if you want to make a career out of it. But anyways, I love the stuff was just done. Is doing the work properly, journaling properly, and then not flip flopping systems. Sometimes okay, what are you doing wrong? That same system, just tweak that system up. When you tweak that system up, you've got the basic blueprint. You're always tweaking. Even now, I'm always tweaking after 8 years, because my conditions are changing. I gotta adjust the way I enter sometimes. I gotta be more cautious. In this one, I'm so cautious the past couple of weeks. I'm at a clear read, but that's fine because that, in the end, it averages out. At least I'm not losing money. I'm holding my powder right. Other people at that time will have, I'm thriving. That's fine. Everybody has their own system. Everybody's different. Some people say, why did you take that? Well, that's not part of my plan. But I only take trades that are high probability in my plan, and I'm fine with missing out. So I think you just keep it simple, keep it basic. Don't get overexcited. Don't keep flip-flopping. You'll find the system that's not working, just do reverse that, or work on that. Why is it not working?
Work on yourself, right?
If you actually journal properly, right, you can take something basic and really make it work. It's like, for example, people say, oh, I learned off him, right, and it's not working for me. Well, you can learn the basic blueprint, but it's not gonna be. You're not gonna trade the same way like in school. You have the one teacher's teaching you the same thing. Not everybody's gonna pass. You can't blame the teacher. That's down to you. When you're executing that trigger, when you're taking that trigger, that's down to you. So everybody interprets it differently. I often find that people, you get the basics. Once you've got the basics and consistent with that, everybody normally always internalizes it. And then once you've internalized it, you tweak that to suit yourself, what you see clearly. For example, say me drawing a box isn't clear at times. When me drawing at a certain range, that makes it clear for me. So if I'm looking at this, got a clean chart. If I'm looking at this here, I mean, where do I enter? So what makes it clear for me to enter in this situation, going back to this old range here? And I said, oh, that's a lot clearer to me now, because now I can see. Now, at this point, where do I buy? If it reclaims above that, we're back within here. So I'm taking it from there to there. See what I mean?
Yeah.
Where I rather say, oh, this is not for me. That's fine. For me, it's a clean break above your hold. Then that's my trigger. So you got to look at what is it that you see clear. Forget everybody else. Okay. And this is the dangerous thing as well. If you're still developing, where even though you know that's right, you can say everything you want. I shouldn't have done this. I shouldn't have done that. But it's just that moment of irrationality that ruins everything. So you gotta be mentally strong enough to see you're having a bad period where others are smashing it. That's usually gonna make you FOMO into something.
Yeah. And you also, I think it's also important. Go on, Don.
I like how you said it's just a trade thing, because that kind of gets forgotten on crypto Twitter all the time. It's like everyone is just chasing that one big win that they can retire off of. And for some reason, it's like, let's say this entire move right now, you have an old season, whatever, right?
Yeah.
And everyone is acting like, okay, that's the one chance that they have. And anyone that doesn't get it is just an eternal loser. But it's not the case, right? You could just do whatever. I mean, there's going to be another trade. There have been altcoin moves since 17, for example. There have been Bitcoin moves pretty much the entire way down or entire way up. So you have a lot of chances.
It also filters out people that are new as well. So you normally find that kind of behavior, or people say that with somebody are new. If you've been doing it for a while, eventually think about this, right? If I could just forget crypto, I've made when this was dropping, right, I made more in this than like 6 to 8 months in FX in one move like this. Okay, these are one-off events. Do you know what I mean? They don't always happen.
Yeah.
And even in FX, you get those one-off moves. But the normal trading is, the normal setups, you don't get massive black swan events always happening. This is the thing. If you've been trading long enough, you know what. In time, as your account grows, keep it simple. As your account grows, that 1 hour is going to be worth something eventually. Large. So you only realize that time down the line. And you start to realize that, internalize it more as you become consistent and you block out all that kind of hype, one shot, one kill, things. If you realize that, if I keep on doing this grinding consistently, that small account guy is going to grow. And say I'm risking 1% trade, as just an example, that's going to be significant in the amount of time. So that move I missed out on, like I could have change my account from 0.1 BTC to 10 BTC. Well, once my account has grown and followed the process properly, I've been making that 10 BTC consistently, just an example's sake. And then you look back and say, hang on a minute, why was I hyping all of that? But no, it's that short term. People want that short term, instant reward. Trading not like that. It took me years before I even felt. You know what I mean?
Yeah, for sure, man. For sure. No, I think it makes sense, and I also think just from a trading development point of view, you should have some kind of bread and butter setups in your trading to kind of clock you over those 1 hour, 2 hour trades, from time to time, so you're not constantly relying on just catching the one big volatility spike, or you just don't trade at all or lose money in the chop, right? So I missed, and I was on the wrong side of the breakdown from February, March from 9.6, and then the next month was the best trading month I'd had in really some time, right?
Yeah.
And that's like a perfect example of like the conditions that often follow the big move are almost better to trade than the big move itself, right? Certainly if you missed it. But if your mentality is like, oh my god, I've logged onto Twitter, everyone's caught the big move, I'm seeing all the screenshots and the Discord messages and the retweets from like 2013, oh my god, I'm such an idiot, I've missed it. While those guys get complacent, a lot of the time it's, a really great time to trade.
The one that makes me laugh is when people post that I made 400%. Right, okay. If you're going to post 400%, why don't you just post how much you made then? Yeah. Do you know what I mean? Okay, 400%, yeah, okay, you took $1 to $4, 1,000%. What is, if you think about it like this, why are you doing that? Think about the psychology behind that. For somebody to go up and do that, it shows they need that, you like it. Either you got an agenda going, okay, where you got a background agenda going, oh, why do you post 1,000% gain? I made that. What is it? What are you trying to prove? And then it's just everybody hyping each other up, saying, you know what, I'm not going to take the piss out of him because I'm going to do the same thing as well. Because look at the likes he got by saying I've got 1,000%. Binance or FTX, those app screenshots.
Yeah.
I mean, I'm just waiting for Warren Buffett to start posting those 1,000% gains. They look what I made. You don't need to. You know what I mean? It's just, I just don't get it. But yeah,
I mean, it's stupid, and even more so because I mean, you can just 100x leverage like a $0.5 account, and then do that like 50 times, and then post like a 10,000% gain. And it's like,
and not only
why the
that, right?
fuck?
You know what? It
Like,
makes
why
you feel like
bother?
shit.
Yeah.
Because you deep down, when all the likes are done and you move on to the next day, deep shit, man. That 1,000% is really only a couple of $100, really.
If
It makes you feel shit. If that, but see, you're damaging your own psychology in that sense. Not only are you misleading people,
Yeah.
you're not turning 1,000% one Bitcoin to 100 Bitcoin in one trade. That's a lie. You know what I mean? Or maybe one-off events, on the big alt seasons. But those are one-off, events. But yeah,
Yeah, you can't
anyways, I
rely
guess.
on that to like make up the brunt of your trading career, right? I think that's what it ultimately comes down to. Is like, do you have practices or some sort of methodology in place that is worthy of making up a trading career? And if your whole one thing is that like, one run, one rally, one move, one trade is going to make it forever, then sure, with crypto, if anything, there are abnormal numbers of exceptions where that does work out, but it's not something you can rely on. And I don't think it's a good trading mindset to have generally,
Yeah, I know crypto is live changing. I'm not gonna deny that. Yes, that's true. Especially those that got in early days. But those days, whether they come back or not, I don't know. But I think everybody's trying to be those type that bought Bitcoin right at the low. That's not everyday occurrence. I'm in FX, right, and I'm sat all day in a 5 pip range. The fuck? And then I'm seeing these 300% gain. I'm like, what am I doing wrong? You know what I mean?
Yeah.
But don't get me wrong. I mean, like I said to you before, I mean, crypto has made me a lot by it's big moves like that. But you say, yeah. So don't get me wrong, it's probably more you make if you catch a move on crypto, but at the same time, it's dangerous as well.
Yeah.
There's a lot. It's very, very dangerous. But just be realistic. Just be honest with yourself. The moment you accept your reality and deal with it, then you'll progress. But if you're gonna just pretend to do this, that, the other, then you're just lying to yourself, really, aren't you?
Yeah. No, totally agree, man. Totally agree. Well, look, I think that's a perfect point on which to round off. Do you first want to tell people where they can find? I mean, everyone knows anyway, but just for procedural sake, where people can find you, follow you, look at your stuff, engage with you, etc. Any plugs or shout outs?
No, just my Twitter feed, really. You all know my Twitter feed. And I've got a YouTube channel.
Awesome.
That's it.
Duck,
Yeah.
any comments, remarks, criticisms?
No, I'm happy.
Rap beefs. Okay, fantastic. Well, look, thank you for coming on. It's been fantastic to have you.
Thanks for having me, man.
And make sure to come join us in the future again, maybe during another crazy move. Thank you to Bybit for sponsoring Technical Roundup. And of course to the viewers, if you haven't already, make sure to like the video and replay it on 0.2 times speed so that you can learn and understand stuff which may not be super easy to keep up with. You all know the content schedule. You will have me on Monday, Newsletter Tuesday, it's free, link in the description. Donald on Wednesday, and then we do it all again with Casual Friday, and the market cycle restarts. Hope you've enjoyed and learned something. Have a safe weekend, and I will see you all on Monday. Gentlemen, thank you very much for your company as well.